question is going to be from Mint Guy. And he asks, Head of Ingenuity, your opinion on low supply DeFi coins such as Wi-Fi and Maker. I don't know if Maker is MKR, is probably Maker. Seems like they will obliterate Ethereum and Bitcoin pairing just because of FOMO and very few supply. Your thoughts about that?
Yeah, I think so. Makes sense, right? The obliterate in the price number, the number on the token price. Yes, because if there's only 30,000, right, and everybody wants it, you can see the price
it's going to
going
skyrocket in price, of course.
Yeah, it's gonna go but it's gonna go higher than the price of Bitcoin. Yes, because it's the market cap will be lower, but the price will be higher. Do you understand?
Ah, yes, I do.
Yeah, so it will because even though their market cap will be like a third, like 1/10 of the Bitcoin, right, or less, it wouldn't matter because their price will be like 100,000 or 200,000 or whatever, or something like that, and that's only reflecting the fact that there's very very little coins. That's all, nothing more. So that's all it is, right? So nothing has really changed. Whether they had 30,000 coins or 30 million coins, they'd still have probably to end up with the same market cap. Well, around the same ballpark, right? So just the number, right? And I think maybe more so with the lower market, with the lower coins, the number of coins, only because it will just go, oh, look at that's going faster than Bitcoin, going higher than Bitcoin, and just how you didn't understand how it would go higher than the price of Bitcoin. People will look at that and go, oh, well, I got to buy it because it's better than Bitcoin. So there's a probability that it might be, if you had lower number of coins, you have a higher probability of actually being a higher in price than if you had with a higher number of coins. All right, next question.
So it's not better; it's just more expensive.
Yeah.
MindExcel asks question: Do you recommend? Okay, you're recommending using maximum 5% loss on your stop loss on the trades. So if I'd be trading with a 10x leverage, the stop loss you would recommend is 0.5% of the Bitcoin's price movement. On what leverage do you trade?
Well, the leverage all depends on how much risk you're taking. So it's not based on. Let me just show you, right? If you're gonna trade something, right? Let's just go down to the 5 minute. There we go. Let's just say you go, okay, this is a fake out. I don't believe this is going to break down. I'm going to hit my fibs. I'm going to hit the 78.6 right here, and then take the loss at the 100%, which happens to be 37,885. And so what's happening here? You can see my percentage risk is 0.43%. 0.43%. Now, I could take 10x here, right? And of any, let's just say I decide I have one Bitcoin and I put in 0.5 in risk, or 5% of that in risk, right? So that would be 0.05, right? A 10x, right, on this thing, right, is not 5. Is only 5%. Is 5% of the 5% that I'm betting. So I bet 5%, right, and I could lose 5% of what I bet, right, because it's the 10x ratio, right. So I know that was a little bit confusing, right? Hopefully you'll understand, right? It's just that, I took 5%, 0.05, and then I go 10x, right? And that means that my actual risk is not 4.3, but well, let's just say 5%. It turns out to be actually 5%, 0.5%, right? It actually gets augmented by 0.5%, but it's only 5% of what you risked, right? What you actually risked. So you could probably go a little bit higher on the leverage, right? You can even go, 50x on this thing, or 25x, very easily, right? And that's how you deal with leverage. Okay. All right, Inti.